Hi, this is Simon with Trading for Form Coaching, doing the trade review for Friday, the 4th of April, non-farm payrolls day. So, going into it, first of all, I didn't do the morning trade review. I was supposed to be on an airplane, didn't quite make it onto the airplane, so wanted to go over how the day unfolded. It was actually quite a straightforward day out of the gate. So if you look in the morning, I put out two warnings, and I do this every single time that we get to non-farm payrolls. And the first thing I say is, first of all, non-farm payrolls are hard. Over the last 2 years, they've gotten easier because they've gotten easier, and the reason they've gotten easier has been because we've had QE backing the market. So every time we get a poor jobs report or a good jobs report, if the market went down, there have been responsive buyers. But recently, and this was starting with last month, strong jobs reports have created downside motion on the non-farm payroll day. In addition, people have gotten used to the markets going down and getting responsive buyers to push them back up. A lot of traders have gotten lax in their downside capital management. Additionally, non-farm payrolls brings out hedge funds, mutual funds, pension funds, very, very large trust, billions of dollars, guys. And those guys do not care about individual support resistance. They're not in it for the day trade. They're moving around very large sums of capital in a very short period of time. That means that trade ranges increase, speeds of trades increases, stop runs, meaning if you have your stop getting run over that stop and getting hit 3 or 4 or more ticks below where your stop is very common. And traders, most people, okay, trading is a very dynamic and difficult thing to do, particularly day trading. It's difficult to quickly adjust to the speed of the market, whether it's slowing down dramatically or speeding up dramatically. The next part that people have difficulty with is when it changes its ranges, right, from day to day, week to week, and month to month. What we witnessed yesterday, if you'd been a trader for the last 10 years, is quite normal. It's one of the reasons that many top traders simply skip non-farm payrolls, and I'm talking about day traders, because their edge gets diminished due to the speed of the market. But we did have a couple things that helped us out. The first thing I want to highlight is when I put out the, and in the morning, when I put out my trade, my trade plan, or the zones at least, right? I put open drive, real strong possibility. I didn't say open drive up. I just said open drive, very strong possibility. Why didn't I put up or down? First of all, I don't pretend to know where the market's going to go. I let the market dictate what it's going to do, and I am reactive based upon the opportunity that it shows me, right? If I get stuck in saying, hey, the market's going up, or hey, the market's going down, then I'm having to defend that idea. I want to stay very neutral in my stance relative to what the market's doing. And then the next thing I said, I'll adjust the open high shortly after, and what I meant is Globex high, shortly after the open. Non-farm payroll brings out longer time frame traders, okay? Emphasize, longer time frame traders, okay? And outsized move possibility, higher than normal, okay? This is at 8:25, guys. Market still hasn't opened, okay? And then at 8:42, open drive, noted as a concern, okay? Open drive tells you that there is a strong chance that we're going to have a trend day, or at least a very large range extension in the direction of the open drive. In addition, I cover the drives and implications every day. This is also why I don't trade NFP, which I don't on most days, because accounts really do get all blowed up. I was in a funny mood, right? So let's discuss why it was so hard, first of all, to trade these, okay? So let's go over here. Okay, number one. Let's look at this. First of all, look how many levels are combined in this one trend day down, right? Number two. Look at the size of the open drive, right? We trade from 1892 right down to 1882 in the first 20 minutes, pretty much straight down. Compare that to the prior morning, right? Look at the range here. This is 1887, right? Down to 1880. And look, we have nice rotations here. Down, let's get this so that it actually has a color. down, up, down, up, down, up, down, up. It's very orderly, this entire sale. It has a very nice sine wave, very easy or relatively easy to trade up and down. This is what traders are used to. Compare that, look at the violence that's going on over here. This is straight down. You bought this, and man, you're getting buried fast, right? Number one. Secondly, you think, okay, I've got it, open drive lower, I'll short. But if you're not a patient short and you don't understand how the structure, particularly in areas where we get trade like this, right? This is 10 down, and then it reverses and it comes up almost 8 up, okay? Huge ranges in the first 45 minutes of the day, right? And again, I've suggested numerous times, if you can't tell whether we're having an open drive or not, skip the first 15 minutes, but this is textbook. Open drive lower, okay, print it, get used to it, it happens all the time, okay? Next, what were some of the other issues that were occurring? Okay, we were below Globex high and unable to penetrate, check. First 5-minute bar is the high bar. Now this is an inverted open drive lower, meaning we got gap fill. They went a little bit past gap fill, which is, by the way, why I don't trade gap fill usually, right? Then we came back up, and then we broke, okay? And you'll also notice that Globex low, we already broke Globex low and trapped one time back to the other end of the range. The second time we broke Globex low, that's where there was a problem, and that's why you get this huge candle right here, okay? Also, this zone, first time into the zone, responsive buyers, right? First time into this zone from beneath, right, because we opened here, responsive sellers. This zone got blown through. I have rules on how to trade zones that get blown through, and also critical, right? We have now tried to trap back above Thursday's high, which is what they were doing here, and they failed once they trapped back below. Again, another piece of evidence of a move to the downside. I'm just going to continue going through this day. Okay, we get to Thursday's low. First time into this zone, okay? Again, and this is after the first hour already, right? First hour is the hardest. First time into this zone, we get a responsive buyer out of the first touch of the zone, up in this particular case for about 3+ points. Okay, second time into the zone right here, zone gets busted. There's a reason why I focus on the first time into the zone. And then again, first time into the zone right here, pushes to the back, but you notice a 2-point stop behind this, 1869.25, right, would bring you to 1867.25. Your stop doesn't get hit, and you get your rotation up. Now I got to tell you, you might not have gotten your rotation for 2 full points, but look, this is 5, 10, 15, 20, 25 minutes in the zone. And even if you took the top of the zone, you didn't take the middle or the back, you had your 25 minutes, you should have gotten out with a profit and or flat, depending on how you manage the trade. Okay, next, you come down to the next zone right here. First time into this zone, okay, gave you a responsive move back up 2 points to 69. You should have easily been able to get out of this trade without any issue whatsoever. Even if you didn't get out here, it came back around and tagged 70 eventually. So there was at least a 3-point rotation back up without your stop ever getting hit. And again, notice this is counter trading, right, while the market's still going straight down. If you're short from the trap trade up above, you are doing fantastic and you're having a great day anyways. Next, these blue areas, I'm not going to cover them right now, but they mean that the market's susceptible in these areas. This is an open gap down here, right? First time into the zone. Again, 2 points. Okay, this thing's becoming very common. The zones, when we get a normal two-way market, which is what this is, coming down, going back up. It's not driving in one straight direction after the first hour. Again, this is normally, over the years, what I'm accustomed to with the zones and why I make as much money as I do. It's been struggling a little bit the last couple of months, but I think now that NQ looks like it's broken, we should get two-sided market again. And then again, at the end of the day, first time into the zone, you did not get your 2-point stop hit, and you easily attained your 2-point target, and or if you exceeded the 25 minutes, you should have been able to get out of the trade at least flat. Every single zone provided a counter rotation back up, with the exception of this zone, which would have stopped you at 25 minutes, and the open drive lower. And again, if you just simply sat out the first 15 minutes to make sure you're not caught in an open drive, you had a very easy day there because there was no problem after the first 15 minutes. First time in the white zone, okay? Look, it was a micro white zone because the true white zone was all the way below, right? And it said, buyers in control above, sellers below. Now, how does this work? This works like kryptonite, okay? The closer the market gets to it, the more influence it has. Again, the first touch is still primarily the focus. Second touch, it flushes. Sellers are now in control. And you'll see that now that we're underneath that, again, it acts as kryptonite, pushes the market down, but not without the counter rotations. Okay, so if you're a trader, you have, first of all, if you're following someone who has less than 2 years experience in the market, they have no clue as to how dangerous non-farm payroll days are. There's a lot of people who know now because I promise you a lot of accounts took some very big hits. Also, let's take a quick look at NASDAQ really quick. Where do I have that? Is that here? Here we go. NASDAQ. Couple of clues. First of all, this is Globex high. We opened below Globex high. We tried to get above prior day's high, traded just a tick or two above, and flushed hard. This guy's is open drive lower still, even with the attempted move above off the open. Okay, NQ has been leading ES up until about a week and a half ago. NQ led ES down. Another thing, people are used to the ranges, right? The ranges have increased. Up until late January, the average range was 15 to 30 points, right? We've now gone from 15 to 30 to 30 to 60, and now we went to, at one point, 105. This right here is triple the average range for the past year, okay? Because the recent expanded range has only been temporary. If you're trying to trade this, and you have triple the volatility. I mean, these moves, guys, I know it's a tiny screen. These are enormous moves. Look at the size of this one bar, right? 37.12 all the way down in one single 5-minute time frame down to 37.01. Okay, that is huge. This move right here, this is $220 roughly on one contract in this move. Okay, this move from the high in 15-20 minutes. Talk about a bad period of time where you just make some poor decisions or some great decisions if you shorted it. 37.30 all the way down to 36.90, 40 points. That's $800 a contract if you screwed this up, right? For guys who said, I'm just going to hold on, it'll bounce back, it never happened. And by the end of the day, they were able, on top of their $800 loss, they were able to tack on approximately another $200, $1,000 for the day, for the guy who bought the open and figured we were going to open drive higher and had no management skills. I promise you there are people that repeatedly try to buy this dip, okay, and they repeatedly got pounded. Why? They simply didn't recognize something very simple. Open drive lower. That's it. That's all you need to know. Non-farm payrolls. That's all you needed to know. Okay, now, could have you gotten this short? Sure. But let's be realistic. Okay? Almost no counter rotation back up. Again, another clue, right? Almost no, there was just no response to buyers, size of rotation down versus size of rotation up. And those who are trying to hold on to ES to move higher, because if you'll notice, there was a huge divergence, right? And people were betting on, okay, if you look at ES in the same time frame, okay, ES, same time frame, okay, we were barely down initially. Okay, this is the first hour right here. And we went from 1892, 1882, all the way back up to 1891, almost 1890-50, right? This is, and you'll notice the zones tagged exactly to where they were supposed to be. Okay, this was really relatively gentle compared to what was going on in NQ. But trading is a dynamic sport, I would call it, right? And if you're not used to switching up your game plan quickly, it will chop you up and eat your lunch. And I promise you, there's a lot of people, for all the money they made last week, got really ransacked through here. And that doesn't have to happen, right? You can have a couple of policies to ensure you don't get run over on days like today. The first one is recognize which days can provide these type of both opportunities and punishments. Okay, number one, you have the option of decreasing your trade size on days you know they're going to be volatile. Now, the problem is most retail traders, instead of seeing this as a harbinger of danger and like surfing near the rocks, right? Instead, they see it as a huge opportunity to have a massive payday. It rarely works out that way. It does for some, it doesn't for most. Number two, if you are going to trade, you can reduce your trade size, right? But again, greed tends to get the better part of most traders, and they don't want to reduce their trade size, or their account is so small they simply can't. Okay? So make it a mature adult decision and go, hey, the market's bigger than I am. I'm going to respect it and either reduce my trade size, not participate, and wait for a day where the range is a little bit smaller and I have better odds of making money. The last piece is respect. When there's OTF in play, right, other time frame, respect those guys. It's not like there's some chump that came in the street and is going to trade against you. These are the Fidelities, the Schwabs, the BlackRocks, the Paul Tudor Joneses of the world. And these guys are Mike Tyson compared to you. They're going to kick your ass all day long if you don't respect them. Okay? No one would go into business against Kimberly Clark, right? So I'm going to go head to head with them as a one-man operation. Few would, and of those few, almost none would succeed. Okay? The last piece, respect yourself. Respect your own stops. Okay? And realize that what you're dealing with is actually quite a dynamic environment and hard to get very good at without practice and giving yourself time. Master one trade at a time. Respect the market. Know where your advantage is. You're a small guy, so guerrilla fighting, in essence, is where your advantage is if you're a small trader. And by small trader, I mean anyone with less than $1 million. You're a small trader. Okay? So the psychological part plays a huge balance in this. Also realizing psychologically, if you come to the table knowing the ranges are going to be very huge and you get overwhelmed by the range very quickly, your brain's going to go immediately into a fight or flight scenario. It's very hard to make good decisions under a fight or flight scenario, and what you end up doing is saying things like, what the hell did I do that for? You'll take a trade that you would never take under calm circumstances, right? But the moves are so brutal and so fast, having stops get run over can trigger a lot of fear in trading, right? And the next thing you know is like, dude, I am in the hole and I got to find a way out of the hole, and then you just start burying yourself all day long. It doesn't have to be this way, right? You can have a written trade plan that accounts for days like today, and you can do your research. Go back more than 2 years to look at non-farm payrolls. It's pretty easy. First Friday of every month. And go see how they used to be. And there's been days where I've seen non-farm payroll like this. 30 or 40 down, 30 or 40 up. Okay? And you get cremated on the way down, and you get cremated on the way up. Why? It's hard to read what a huge trader is doing, and they can run over you with their size, and it can be jaw-dropping. So anyway, my name is Simon. Have a trade plan, guys. That's all I can say. Have a trade plan. Respect it. Respect the market, okay, and respect yourself. Have a trade plan that fits within your skill set, okay, that gives you consistency day by day, that gives you a plan for increasing and sometimes decreasing your trade size when appropriate, okay, and actually get that consistency that'll build your account. Anyone can learn how to trade. The problem is you're going to have to surrender action for accuracy, and that's where a lot of people fail. So anyways, I hope this helps out. I'm definitely not trying to be a beatdown. I feel for the people who got crushed yesterday. For those who made a lot of money, congratulations. Okay, but too many people were looking for reversals, in my book at least, for a down day. And I had one last piece. There's too many traders that are banking on these end of the day reversals like this, right here. Way too many traders banking on this. This short cover, and I tweeted this out, this short cover made a tremendous amount of sense. Right here, this this short cover made sense because we were right in front of NFP. Think about it. If you were short, right, and you go, non-farm payrolls is coming out, I'm going to cover, which also generated this cover right here. Okay, it generated this counter move here in the afternoon, which was actually a pretty decent counter move back up. Okay, but even with that, and even with the news that came out, we weren't able to get above prior day's high in the RTH, or if we did, we spent just a second at it. Okay, so you've got to be able to quickly link all these things together. And there's another issue with that. Think of trading like riding a bicycle, right? When a kid learns to ride, first, you got to pedal the bike, you got to steer it, you got to push off. If anyone's taught their kid how to ride a bike, it takes a couple of attempts, to get all that to be in a fluid motion, right? Push off, pedal, steer, look where you're going, and keep your balance. Okay? Trading is the exact same way. You've got to have context. You've got to have an understanding of what the market might possibly do. That's easy enough. You can just look at history, right? And then you've got to be flexible enough to adjust to the speed of the market, and you've got to quickly realize that the range may have changed on you, right? And when you realize that, instead of trying harder, try less. Step back and go, this is the range, okay? How am I going to adjust my trade plan in this? Anyways, my name is Simon. I hope this was helpful. It's not meant to be in any way beat down, but to help traders become professionals and realize their dream of being able to trade and make a living off of this. And but you've got to know the lay of the land, and you've got to have one trade that you are a master at that you can repeat over and over and over again to make your money. And after you have that one, you can add a second one and a third one, right? And by the way, generally speaking, if the trade you're looking at is written in a book, okay, it generally is useless, is my opinion. So stochastics, technical indicators, all of those are broken indicators that people use as crutches to give them a sense of security that they know what they're doing. But in my humble opinion, they simply do not work. They cost far more money than they'll ever make you, and they will keep you from consistency, in my opinion. So anyways, I hope everyone's having a good weekend. I'm going to enjoy mine. I will see you on Monday morning. The trade reviews, the pre-market live market previews will resume. And I look forward. I think we're going to have a two-way market going forward, which is great news because it'll mean that, at least for me, I'll be making a lot of money. Have a great day, guys. I will talk to you later.